All right. Welcome, everybody. You trader nerds, you bunch of nerds. Those of us that cannot wait till Mondays to get back trading. Good thing about us future traders, though, is we don't have a lot of off time. You can do Sunday night if you want to. You can do Friday, kind of after the markets close a little bit. So we got all kind of things that we can do with futures, which is what we primarily trade: futures options. Just the world that we live in. So welcome out, y'all. I can't believe so many of y'all here. It's amazing. What's wrong with y'all? Did nerds equals profits? I like that, Gerardo. I like that. Hey, so let's see what's happening, y'all. Market, I get a little email anytime the market's up or down over 1% from the CME group. And they said futures were up over 1%. Well, not anymore. So we were above the overnight high. We were above the opening 15-minute range. We were above cash open. We were above the VWAP. Now we're below all that. We're below hourly mid. We're below this pivot point. And look at this, y'all. We are going downward. What is happening? Volume is 4,700. So not a lot of volume. So what we remember, here's how we know if the bullish push is indeed if it's going to rally and keep on going. So what you'll see is ever since this point, you'll see the volume. If you can see the bars at the bottom, volume is kind of continually going down, especially on those down days. Look where we have the red volume bars, which means it was an overall down day. You see the red volume, we had more participants, right? So we had more participants on down days, which shows us that the rally is not sustainable. That's why we're saying, y'all, we are continue to be in the bear market that I called on this date. We continue to be in a recession that I called on this date. Jamie Dimon apparently says that, what did he say? Hurricane is coming, prepare for the hurricane. I tend to agree with it. So I came out and said, hey, we're going to be in recession before Jamie Dimon did. How about that? Sweet Bobby coming out. And then Jamie Dimon just has to come out and kind of copy me. We understand, imitation is the best form of flattery. So Jamie Dimon, thanks a lot. Now, even so, we still have this 4280 price target that we think we're going to hit on or before June the 27th. So we anticipate a little sideways, motion, and boom, we think we're still going to hit 4280. Now, with all this up move, I told you it's just been terrible on our calls, y'all. Right? This has been terrible on those calls, and I continually say why sell calls. And now let's show you why the calls are not as attractive. Let's just show you. Let me hide all my stuff here so I don't get in trouble. Privacy mode. All right, here we go. Let's just show you why we don't like the call side. All right. So let's say we were going to do a 112 today, and we're going to go into the micros, and we'll do closest to 60 days without going over. And let's say that our naked component, remember our naked component on a 112 is the $10. So let's find the $10 one. Here it is, 32.80. All right, 32.80. How far is that from the market? Well, the market price is 41.24. 41.24 minus 32.80. So let's see how far away from the money we are on selling our two. Right? So we are 844 points from the money on our typical 112. Everybody with me? Y'all see how far away that is? Yeah, no skew, Ed, right, compared to the puts. So we're going to illustrate that. So we're 844 away from the money. And if you look at it on the curve, we are 2 standard deviations out of the money at that 32.80. Let's see if we can show that. Let's see. Come on, little baby. Here we go. Here we go. I was going to try it. Anyway, here's the 1 standard deviation down move. We go down here. See this little dotted line here? That's 2 standard deviations, right? All right, so let's go back to the table mode. And let's see if we were going to do the 112 on the call side. So we'd be looking for the $10 one as well, right? So where could we go? Well, let's even go here, 45.50, right? So let's sell the 45.50 twice. And let's see where that is. Well, first of all, 45.50, how far away is that from the money? Remember, this was 8.44 away from the money. So this one is 45.50 minus where we're at, 41.25. We can only get away 425 points from the money. And notice that so it's about half, right, of how far we can get away on the put side. And you see this little line here, that's the one standard deviation line. So let's bring it up on this side. And as Ed said, this has to do with the skew and the option. So skew is on the put side. So see here, we can only get this close, one standard deviation away. So if we were to sell a 2 standard deviation to get as far out of the money, we could only get 5 cents for the option rather than the $10 that we could get here. So everybody sees that's why, y'all, I'm saying I hate calls, selling the calls, even in a bear market, it just hurts. It's painful. And Karen hated calls. I hate calls. So I don't know if I'll ever sell a call again. I mean, I'm sure I will. So if I get too long in my selling of the 112 on the put side, what would I do? Well, for me to get too long, according to my little formula, would be this. If we have $100,000 account, that would mean that I am long by 0.0015, 150. So if my deltas on 100,000 account get over 150, then I need to reduce my deltas some. So what would I do to reduce my deltas? In that case, I would probably just sell a micro future, which would give me negative 50 deltas, and just forget about the calls, right? That's probably what I would do. So we hadn't faced that problem yet, so we will see. But I just wanted y'all to see why it's difficult to do things on the call side. It just is. All right, John says, what is more likely to happen by expiration, a drop to the naked put or a spike to the naked call in a bull market? Oh, exactly. It's going to be a spike to the naked call in a bull market. And we're even taking some pain on our naked calls, even in a bear market, y'all, on these little run-ups that we see from time to time. So, that's why I'm saying, come on, man, let's just be wise. I think the 112 is the best trade on the board. Yeah, I think even in a bear market, you're still going to get killed to that call side, because what you'll see, and this is typical of a bear market, right? I call bear here. We're probably in a bear here, right? But what the thing is you're going to get vicious rallies to the upside. See this in a bear market? This is typical of a bear market, and then it goes we just kind of go down. So remember, and the way that we know that we're in a bear market is the big boys are not participating in the rallies, and it's so crystal clear. If you'll look at these volume bars, you go, okay, I kind of see that. You start seeing, hey, look on the rallies, the volume is decreasing volume. What do you see here? You see decreasing volume, and then on the down days, volume increases. Clearly a bear market, even though we're going to 42.80, right? We're going to 42.80. It is just a matter of time. So let's look at our volume profile. See what this looks like. And we always look at it on the ES. Recent rally has hurt bears 112. It has. Dwayne says option buyers aren't afraid of the market crashing up, so premium is less on the call side. Exactly. So here we know this would be overbought, so this is oversold for the fair value area below it. That kind of corresponds to what we're seeing, right? We believe that we're going to get by the 27th a move up to this 42.81. That's why I've identified 42.81. So this is indeed a bullish chart that says we should see a return to fair value. Now, before it does that, and I always love it, if it doesn't go up, it's going to go down. We're never surprised to see these areas with these little pockets, with their little pockets of no volume. We're never surprised to see those fill. It's just that my opinion is before the 27th, we're going to hit this. And yeah, eventually we're going to fill in these pockets as we continue the overall longer term of going down. Now, the kind of cool thing about it all is I don't think market direction really. Wow, y'all hear lightning here? Hope I don't lose my internet. We're in the woods, y'all, so it very well can happen. But market direction for what we do, is really not all that important, I don't believe. So I think we're going to do just fine with the 112 trade in a bear market. So I'm not going to go in and bore you guys today with doing all of our Greeks and all of that. Let's just put on our trade and get it done for the day. I'll send y'all on your way. As my kids just got back from Vacation Bible School, which is, I hear them in the background, and I'm sure they got all kind of songs to share with me today. So let's do our trade, y'all. So let's go to Tastyworks. Here we are, Tastyworks. Let's clear it all. And let's build us a trade. All right. I'll use the micros. If you're a big money dude out there, you can use the E-minis. And some of y'all are doing E-minis. Some of y'all are doing SPX. Whatever you want to do. So I go closest to 60 days without going over. It's where I'm comfortable. It's just where I'm comfortable. So 60 days. So we'll go long put vertical, 50 wide, and we move it down. It's $22 there. So we're going to move that thing down to where I can get it to about $10. Look at that. That ain't right. Yeah, $11.75, buy, sell, move down, $10, $9.25, $11.75, $9.75, $38.70, there we go, $30.60, okay, I gotta go down a bit. Why is that not moving? Come on, baby, move down. What's that, $10.50, let's move them all down a little bit more. Oh, there we go, $10.50, down again, down a couple more. So $9.75, move that up to the quantity, dude. Do the price, man, the price. There we go, $10. See if we get filled, may not. Nothing. 10 a quarter. And on these low volume days, we're not surprised that sometimes we have to work this order a little bit. 10 and a quarter. And we're filled. All right, so now since we paid 10 and a quarter, we got to go pay for that, right? So we like to go out and sell something. If we're doing a 112, we like to find something for $10. But we're a little greedy. Sometimes I want to get a little more than that. So we'll do $11, almost 2 standard deviations away. It's a 6% probability of being in the money. It is a 5 delta. So let's do the 33.10, and we'll do 2 of those. 2, 2, 2. 2 of those. That'll pay for. Where's my thingy at? Here we go. And we're filled. All right, no questions. I mean, it's just a 112, right? So we'll go to our activity page, move it over to the side. I'm going to try to put that trade in both of our little accounts over here that we trade. So y'all see me trade 3 accounts. So let's trade it over here. Micros. Come on. It's a rainy day in Georgia. Great. We said we were going to do 2 of 33 teams. And I don't believe that we're in danger of any crash at all. I just think we're going to have an orderly. Uh-oh, I already got a 33.10. I guess I'll sell another 33.10. So we'll sell 2 of these. Ooh, the lightning in the background. Oh, behave. I'm going to do the 38.60, 38.10. 60, 18. 38.60, we're going to buy that one. I've already got one there. On the sale, 38.10. I've already sold one there, so that's fine. So 13.75 credit. Let's see. Zero buying power. How about that? Oh, zero buying power. Wow. Working order, so let's make it less advantageous so we can get filled. So we'll go down to 1350. Come on. Oh, that's a nice rain. Oh man, my grill's out there. I didn't get my, hey, one of y'all get my grill out of the rain. Grill get all rusty. And guess what? The percentage probability of rain today in our area is 0. Well, it is raining cats and dogs, my friend. We'll get filled here in a minute. Still not filled? Unbelievable. Maybe my internet's not working. Now remember, if we're normally trying to get $10 credits, we're still fine. Right? I mean, it's not like we're 13, $59. Come on, fill. There we go. So we got filled at 13. So we'll call this, and we're in the Crimson account. So let's see this one. And my big old Great Pyrenees scared to death of lightning, so she'll be in here. All right, so this one is micros. We did one tranche. So this is going to be a 11227, just standard 112. Uh-oh. What was that? 34. What's 3430? No, 40. 4. Is that right? 3440, 3790. 50 plus, yeah. All right, so our strikes today were 3860, 3810, 3310. On the put side, 112. I said 112. Oh, look, I hate having that gap. 60, 59, 58, 57, 56. Stupid weekend messes up our plans. So today was 53. Put it down on 622, which, by the way, yeah, it is a black swan rain event, right? It happens here, right? So, you know, we are beyond the 2 standard deviation move today in the weather prognostication. You're exactly right. So what was I saying? Oh, 6/6, a date which is very important because we stormed the beaches of Normandy to kill those son of a guns that were trying to take over the world, and did a great job. Can you imagine going on that beach and just being ready to be slaughtered and going, if we can overpower them with sheer numbers, maybe we'll win. And we did. So God bless those people that did that. They are much braver than I am. But June 6th is my birthday eve. Y'all got a birthday party. We will eat cake, maybe. All right, so we get $59. So that's more than we got on Friday, $57. So we got $59 here. So we're looking good. And let's go name it. 11227. Fine. And then we'll do that in the other account. So let's see. Show groups. Where's my group? Then we got to close something too, huh? 11227. Hold your control key down so you can group it. Move to group, add a group, 11227. 11227. All right, now closing a trade. Y'all ready? Let's close something. Now, keep in mind, let's look at our overall Greeks, even though I didn't record them because that probably gets boring, y'all, to see my Greeks recorded every day. I'm not sure. But we're a little negative, right? And we got great theta. Vega is what it is. And I don't know, I put gamma on there just to kind of look at it. So a big up day is not hurting us too much. It says we're up $23. So what I want to do is I'm really delta neutral. I know I am. So I don't care if I really close short deltas or long deltas at this point, because my deltas are really, really sweet. So let's close some. This is the fun part. This is where we pay for the Applebee's, which y'all will be so proud of me. Y'all listen to this. We are a family that eats out all the time. Not in the Biden economy, baby. Not us. We only eat out one time over the weekend, which is normally we did it out 5 times over the week. I swear. We go eat lunch a couple times, and we go out after church. We went to the Mexicano Restaurante, $87. That's all I spent in the entire weekend, one meal. And my kids are like, are we not going to McDonald's? Are we not? I'm like, no, children, not in this economy, baby. We're in a recession. So they don't even know what that is, but they know that we're not eating out as much as we normally have. So we got one up 74. See, here's that cause. Oh, negative $405. You get rid of that at some point, don't we? And just take the pain. This one, 112.19, has already been closed. Let's get rid of him. So we got 74% winner. We got 69% winner, 28, 77 might be our best. 77, 45, yeah, 77, huh? That's our best one. Now, another thing to make sure that you do though, like if you got one that's 77 and you got one that's like 74, make sure about the, how many expirations, because we want to start taking off things. Let's see what we got here. So, if things haven't worked, you go, well, I may need to take those off. So the great thing about our spreadsheet, thank you so much, Ian, for a happy early birthday. The great thing about our spreadsheet is it tells us, how many more days that we've got left in the trade. So here's the one we're worried about, right? That bear, that nasty calls. Anything that says calls or both on it, let's just get rid of those and admit our mistakes and never make that mistake again. So we don't have anything that's, under that one, but we know we're just going to have to deal with that at some point. I'm not ready to deal with it today. I'm still in denial. I'm going to be the ostrich sticking my head in the sand at this point and go, I know I should close it, but maybe let's close it on a good down day this week, because I think we'll get a good down week. We've been getting great, two-sided action in this little bear market. So maybe we'll get a good down day and we can close that out. All right. But that being said, so we're going to close the 112, which one was it? 74% winner? Yeah, 77% winner. So it's all on the put side. It gives us just a little bit of positive theta and a little bit of positive delta. So not really big. And so we'll take our $50 or so after commissions and we'll close this one. Now, you ain't got to close it, right? You ain't got to close it. But I mean, what we found in our back test is that if you're kind of going to go by the book, your most optimal time to close a trade is when it gets to 65% win. So why potentially let a good trade go against us? Now, here's something else that you could do that I really like as well, as I'm rambling all over the place. But let's say that you do think that, oh man, I need some more negative deltas. I think, we're going to get a downside event. What you could do is sell the two naked 3,200 puts for a 60% profit and have a free 39-day 50-point wide put debit spread hedge. Now, how about that? Now that's kind of cool, right? That you could say, oh, wow, so I don't have to close the whole thing. No, you could just say, I'm going to close this and leave me a hedge. So what does that look like? What does the 112.17 look like? So let's go pull him up and let's go high simulations and let's pull up the 112.17 that we're thinking about closing. Here she is. So here's how she looks now, right? She looks really, really good. So, 39 days left. We've got a little profit hump that's building. Everything looks good. But if we had a 5% down move, we'd be up only $19.50. That's pretty good, y'all. Now, if we're down 12%, you're going to be down $186. But what if you take off just these two negative components and you're left with this beautiful baby on for free? You cannot lose. It is paid for. And you've got a wonderful hedge to the downside. So if the market's down 5%, this would be up, what, $19. If the market's down 12%, you're up $97. If the market goes down, what is this, 20%? Let's see, 5, 12, 20. Yeah, market's down 20%, you make $173. And if we close within this little pocket, you're going to make a cool little $200. Isn't that cool? See the expiration, $200. So these are all, and that's why you guys are having so much fun in the 111 chat in our Discord channel, y'all are figuring out, oh my gosh, this trade allows us to do so much. I mean, you can turn it into, as Captain Jones has, and what, a dividend capture strategy. He's using the 112 as a dividend capture strategy in individual equities. We use it in the futures, but there's all kinds of things that you can do with this trade. It's just, it's very versatile. So most of the time, I like just taking the whole thing up. Right? Just take my profits, go on to the next one, put another one on, let it get up to 65, 70%. Let's close it. And you've seen we close a lot of these at 100% or more. So let's go this one and this one. Now, you can't just close all three here. It won't let you do it. So you have to kind of grab the neck component. So I'll go right click, create closing order, sell the vertical that we originally bought. And then we've got to go and buy 2 of 3,200 puts. Let's go find those 3,200 puts. Buy 2 of them. 200. There they are. 2 of those. And increase your contracts. 2. So it says a 330 debit. Let's try. We'll pay 350. Let's try 325. See if we can get out of this for paying $22. Then cut down the NP trees to help protect the forest with the remaining put debit. I couldn't have said it better myself. Exactly. So if you're worried that something bad's going to happen, you know, leave your hedge on. Your hedge is totally paid for. It's a free hedge. Why not? I mean, I think I'm going the wrong way. I need to pay more. I'm paying late. It got me all distracted. Since Matt's not here today, I don't think Matt's here. We'll start blaming things on Ed. It got me distracted. So I need to make this. I need to pay more. Right? So to get out of this, now I got to go. Wrong way. I got to go 350 to make it get out of this. Come on, get me out. There we go. We're out for 350. All right, so we're out on 350. Let's go over here. So well, that's the 112.17 at 350. Y'all remember 350 debt. So let's find it. 112.17. Here it is. That's my second oldest trade. Right? Been in it for 20 days. And our debit, all the mine was 350. Was it 350? Yeah, 350. 350. So it's a debit, so you make it positive. So we paid $23.38 to get out. So we didn't make a lot of money, but we made a little bit. So enough to take the family to Mexicano on a Sunday. Well, with our weekly profits, I guess. So 622. So we made, look at us, $43.24. How does Daddy do it? So let's look at this. 43.24. Let's put it on our calendar. 43.24. We open up our profit calendar, and then we'll look at our stats. 43.24. So here we are. We made $215 last week. That ain't bad. When the Mexicano restaurant at El Mezcal was $87. So we made $43.24 today. Format. There. Nice 43.24. So let's just do a rehash of how we've been doing. So we started kind of keeping up with the profit calendar. We did $954 in April. How did we do in May? Well, not as good as May, and because we had a couple of that went against us. That's going to happen sometime. Even though 98% of your trades are going to be positive, every now and then we'll have something go against us. Now, I shouldn't have closed these. These would have been fully profitable if I just waited. Ifs and buts, candy, nuts, all that about Christmas. So we made $526 last week in this, or last month in this account. And so far we made $250 something this month. All right, cool stuff, right? All right, let's look at our stats. Then I'll let y'all go. I mean, I got some stuff to do in the other account, but y'all got a life too. I'm just going to do the same thing that I did in this account. So let's look at our little, let's look at our, and let's do this. Let's see how we're, let's do this. So our premium capture so far is 62%. Again, isn't it amazing that I said, hey, in the back test, 65% is probably optimal. Well, here we are closing things at an average of 62%. That includes our losers too. We project at our current capture rate that you and I will make $13,000 over the next year. Our projected return at our current capture rate is 50%. Our projected weekly profit is $258. Isn't it cool how we're kind of doing that, right? $258. Well, we're a little short there, but here, you know, 258. Yeah, we beat it there. We beat it there. We didn't make it there, but you know, on average, we're trying to do 258 a week, 211, 217, 375, 149. So we're doing, I think we're good. I think we're doing really well. Let's go back and look at our stats. We've sold total premium on these trades since we started at 38.59, and we've got 60-something% profit, right? So we made profits of 1776, which was a great year, as I understand it, through my history courses. We're staying in the trade on an average 22 days, and on average, we're getting a credit of $67. It's beautiful. You want any questions or comments? Anybody doing anything with the 112 that you think is kind of cool that you'd like to add to the discussion? Hey, Bobby, why don't you do it this way? Or hey, Bobby, why don't you do it that way? Are y'all doing the trades? You know, a lot of times I don't know what y'all are doing. I'm like, you know, do y'all just hang out with me, just watch me, and but hopefully y'all are doing the trades, right? Because we figured out that 98% of the time, this trade's going to be profitable. Just don't let the losers, you know, kill you. And I need to do a better job of that, you know, closing them before the loss gets too big. And I hadn't done that. Maybe cutting our losers a little quick before they go against us. So if a trade hadn't worked out in 22 days, maybe I need to shave it, right? Maybe I need to take it off. Why has it not worked? Is it got a potential to become a loser? But even so, let's watch this too, though, because I think y'all like this. It says I take one of two puts off sometime to reduce the deltas. Yeah, and you can do that, right, to reduce your deltas. Martin says he did 2 tranches of 112. Congratulations. That tells me y'all are doing it. That's good. So let's look at some of the trades before I let you go. Let's look at one that's going against the spread, and it's this one, right? The 112 Bear 17. We got 39 days left on it. It's down 404%, right? We're down $373. Oh, behave. But let's analyze it and see how bad is it? How bad could it be? 112 Bear 17. So go to Analyze tab, and let's go and click up the 112 Bear 17. Here we go. Yeah. So here's the one. Let me make sure I got it all checked here. 112 Bear 17. Okay, 112 Bear 17. So the at the money is, here it is, right? Now, here's the cool part about the trade, right? We're down $371. Oh, behave. But if we stay here for just a little over a month, we're going to be up $92.50. The trade itself is still safe, right? I mean, if we go up 5% from here, right, we're going to be down $1,200. But if a 5% move up from here, you know, stops and we stay here at expiration of July 16th, we're only down $262. But that's why we're taking pain, y'all. We're taking pain. And if we had done these trades on the put side, where the skew is, we wouldn't be taking the pain. Do we want to take the pain, right? Do we want to take, hey, it's a perfectly safe trade. We've not breached the short calls here. This is where we would breach the short calls. We've not breached the break even yet, right? Here's the break even. But do we want to take 1,098 pain if we go up 4 or 5%? That's a question you got to ask yourself. But if you kind of step back and look at the trade, you know, in this bear market, it looks perfectly safe to me. Looks perfectly safe. It's just the skew doesn't allow us to do things on the call side like we can do on the put side. All right, great session today, guys. Hope you have a wonderful day, and I will see y'all tomorrow.